Well, hello there, everyone. Welcome to another edition of Tip Tuesday. I am fresh off a trip, actually from Hawaii. We've been there for the past 8 days and coming back. And so I wanted to talk to you guys a little bit today about a topic that some of you probably are wondering about a little bit, but certainly one worth discussion. And that is, should I go fast or should I go slow? One of the things about being in Hawaii is you rarely get to go fast over there. So when you're driving, like if they're going fast, it's like, 55 miles an hour. You're like, yeah, 55, let's go. We get back to Texas and it's like, all right, you can go 70 on this 2-lane highway here if you want to. So it's very different. And as I was kind of thinking through that, one of the things that really struck me is that there are similarities to that in the market. And so recently, just this past week, for the most part, the market has been relatively range bound. So, not really any big moves, not really breaking out, moving down, not really breaking out, moving up, kind of more going sideways. And yet, in the midst of this, there is quite a bit of movement. So I just checked back. Obviously, today the market was up almost 40 points. So there was a big difference between high and low today. So basically, we had about an 80-point differential between high and low, 80, 85 basically. But then you look at a day like yesterday, and yesterday the S&P, the whole entire market, 500 stocks here. The difference between the high and low was basically like 40 points. Now, what's interesting about that is that historically, let's just say about 10 years ago, a 40-point day would have been a pretty noticeable day. Like, would have been a pretty big deal. But since this bull market refresh, like after the the COVID bear of 2020, when the S&P was around, about 2,200, now the S&P is double that. It's up into the 4,000 range. So when we get a 40-point move, it's basically a 1% move. So a 40-point move is something that it's going to be more common. Whereas, if we had been in say like 2020 or before that, there were years where the S&P may not move more than 100 points in a year. And now we're seeing these 80-point during a day swings. And that at one point was a big deal. You say, well, Geoffrey, how does that really impact me? I'm not really trading the S&P. How does that impact me? Well, our tip for today is to realize that sometimes we need to go fast. So we need to be prepared. Hey, is this a major pivot or turn in the market? Is this something where I need to act quickly and make sure I get in? Or is this a time where, the market's going relatively flat, even though our definition of what that means may have changed? So, a 40-point move is still relatively flat, still relatively range bound, if you will, in today's market, still at that 1%. But there was a time several years ago where 40 points would have been pretty massive, would have had a significant impact on your individual stocks. So, two things I wanted to really hone in on today. One is that when it's time to act, you need to be prepared to act. And one of the things I really wanted to encourage you guys to do today is to realize, all right, yeah, you can take it slow. You can take a long approach, and that's fine. There's benefits to that. There's pros and cons, certainly, to a longer term approach. But if you're looking to do that shorter term trading, one of the things you have to do is you have to be willing to act. You have to be willing to act quickly. You have to be willing to get in. You have to be willing to get out. And you also have to be willing to stop out. So you kind of have a little bit more of that fast moving nature to you. And so that's an important skill set to have. But there are also times when you might feel like, I want to go on Hawaii time. I just kind of want to take it slow. And if that's really the case and you kind of feel like, yeah, I'm kind of leaning towards that, you're going to be more bullish, right? So you're going to be more bullish. And basically, if you can avoid a major correction or a bear market, and these things are going to come, then you could go bullish for the most part. And so the final thing I wanted to kind of tell you guys here is, how does this movement, how does this bigger movement, these quicker movements impact you as a trader trading individual stocks? Well, the thing that you're going to recognize here is that the movements on the individual stocks are also greater and faster than they were historically. And so what that means is you may go from support to resistance, not in, a month, 6 weeks, 2 months. I mean, if you look at our step one, we have some examples where we see like a rolling stock and it takes like 6 weeks to 2 months to roll up to support and then back down to resistance. You're not going to see much of that anymore. Not 6 weeks. It may be, maybe 2 weeks, maybe 4 days. So everything is going to happen quicker, and we have to be prepared for that. So it doesn't mean that you can't kind of take a slower approach and just kind of generally trade. But if you're going to try to catch these quicker moves, just be prepared that in a market like we're experiencing, everything around you is going faster. Everything around you is bigger. Now, that's not necessarily a bad thing, because it means that when you get into trades and they could work sooner and they could be bigger moves. That's great. But also keep in mind that the opposite of that is also in play here, that if I get into a trade and it really moves against me, it could move against me quite big and also quite fast. So even if you feel like, man, I kind of want to take it slow, just be prepared for these major pivots. So anytime you get like to a very clear resistance, or you see, man, the market is really changing one direction or the other, be prepared to act. So even if you kind of feel like, I want to take it slow, I want to be on Hawaii time, there are times when you need to be on Texas time and you just need to act, like in a New York minute, maybe New York time. We can go Hawaii, New York here a little bit. So whatever your desire here is, right? Sometimes you can have a preference, but you may need to shift that preference in order to act on what your stock is saying to you. So remember, we're trading off of fundamentals, technicals, and market tone. But when we're specifically talking here about technicals and market tone, we have to understand how market tone is impacting the technicals. It is creating an environment where things in general are bigger and faster. So it doesn't necessarily mean that you have to, do things quicker, but it means that you probably should. Okay. So especially if you are going to try to catch these, as I mentioned, smaller, quicker moves, you're going to have to be smaller and quicker. And this is an environment where that opportunity is going to present itself regularly, because the size of the moves, even intraday, are going to be bigger and quicker. So I want you guys to understand that our tip for today is be willing to adapt. If it calls for moving fast, everything around you is going fast, you be fast. If there's an opportunity and you say, I kind of like slow, make sure that you're catching those big pivots so that you get in on some of these bigger turns, and that way you can take it slow, kind of ride it out. You can do that, but just don't get stuck in a major correction or a bearish turn down and then ride that out. We don't want you to do that. So ride out the bullish turns, ride out the bullish pivots. Don't ride out the bearish corrections or bearish pivots, which take us into bear markets. Don't do that. And then, of course, if you're trying to catch the quick stuff, just realize it's a great opportunity for you. With the market being so high, you're going to have bigger, quicker movements and opportunities. That can be a good thing, but it also means that you might have to adjust your trading style. And if that's the case, the market leads, we follow. So if we're going to dance with this gorilla, then let's adapt and dance accordingly in a way that we enjoy the dance. All right, guys, that's our tip for today. Appreciate you guys being with us, and we will see you next time.